DWP's 2025 banking shock. 7 hidden rules that could freeze UK pensioners' accounts instantly. The Department for Work and Pensions has confirmed sweeping new banking changes for pensioners in 2025. And these changes are being described as some of the strictest financial rules that the UK has seen in years. For millions of pensioners across the country, this is not just about new forms, extra paperwork, or minor adjustments. It is about changes that could directly affect when and how you receive your pension, whether you are able to freely access your own money, and even whether you risk losing access to funds entirely if you fail to comply. These changes come at a time when fraud is rising rapidly, with financial scams, stolen pensions, and benefit overpayments costing the system billions of pounds each year. To combat this, the DWP has joined forces with UK banks to introduce 7 strict new banking rules that every pensioner must know about. These rules are not being announced loudly or advertised in detail, but the impact they could have on daily lives is anything but small. For anyone over 60, for people who rely on the state pension as their main income, or for those who depend on other DWP benefits, ignoring these rules is not an option. Banks will now have greater powers to freeze or block accounts if something appears unusual. And this means pensioners could find themselves suddenly unable to access the money they need. The government insists these steps are necessary to protect people from criminals who prey on the elderly. But many critics argue that the new rules are making life far more complicated for vulnerable pensioners who already struggle with online systems, paperwork, and ID requirements. What is clear is that the new banking rules will affect daily routines, independence, and peace of mind for millions of older people. The government says the main reason for introducing these measures is fraud prevention. Over recent years, there has been a huge increase in fraud cases linked to pensions and benefits. Criminals are becoming more organized, targeting pensioners specifically, and in many cases, wiping out savings within days. The DWP points to billions lost to identity fraud, benefit overpayments, and so-called ghost pensions, which are payments still being made for people who have died but have not yet been reported as deceased. To the government and banks, stricter ID checks and tighter monitoring are necessary to protect both the pensioner and the wider financial system. However, the burden of these rules does not fall on the fraudsters. It falls on the ordinary pensioners who now have to prove their identity repeatedly, navigate online systems, and comply with complex new procedures simply to access their own money. The biggest change is mandatory identity verification for all pensioners. It is no longer enough to show ID only when opening a bank account. Now, pensioners must regularly verify their identity with their bank in order to keep pension-linked accounts active. This means providing up-to-date documents like a passport, driving license, or utility bills every few years. If someone does not have a passport or driving license, which is common for older people, they will face additional hurdles. If identity checks are not completed on time, the bank may temporarily freeze the account. And if that happens, pension payments will stop until the verification is complete. For younger or tech-savvy pensioners, uploading documents online may be simple, but for those without internet access, those living in rural areas, or those who are not comfortable with technology, this rule will be extremely difficult and stressful. Another major rule focuses on high-risk accounts. If a bank sees unusual activity on a pensioner's account, such as sudden large transfers, multiple withdrawals in a short space of time, or deposits from unknown sources, the account can be flagged and blocked. Payments from the DWP may then be delayed until the bank confirms that the activity is safe. This stop-and-check system is designed to halt fraud before it happens, but it can also affect innocent pensioners who are simply helping family members or receiving gifts. Something as simple as sending money to a grandchild or receiving a lump sum from selling personal belongings could trigger suspicion and hold up essential pension payments. There are also new restrictions around cash withdrawals. Banks will be monitoring large or repeated withdrawals more closely, and while there is no official cap, withdrawing more than a few £100s at once may trigger alerts. Some banks may even set daily limits unless extra checks are passed. The government argues that this will help stop fraudsters who pressure pensioners into withdrawing large sums. But critics say this undermines financial freedom and independence. Many older people prefer to use cash for daily budgeting because it feels simpler and safer, but these new restrictions may make that difficult. Joint accounts are also being targeted under the new rules. Many couples share an account that receives pension payments, but now both account holders will have to verify their identities. If one person fails verification, pension payments could be paused. The idea is to prevent misuse when one account holder has passed away, but the reality is that couples who depend on these shared accounts could face delays in receiving money for everyday expenses. Another controversial change is the shift toward digital-only communication. The DWP and many banks are phasing out paper letters and moving important notices online. This means pensioners will increasingly receive updates, warnings, and reminders only through email or online portals. Those who are not confident using computers or smartphones could easily miss vital information, deadlines, or warnings. For some, this could mean missed payments or compliance failures simply because they did not check an online message they did not even know they had. Critics argue this puts older people at a serious disadvantage, especially those in their 70s, 80s, or 90s who may never have used the internet regularly. There is also a stricter rule about reporting deaths. The DWP and banks are now cross-checking records much faster, and if a pensioner's death is not reported promptly, the account will be frozen. This is to stop ghost pension payments, but families may suddenly find themselves unable to access money needed for funeral costs or household bills. At a time of grief, this additional stress can be overwhelming, and it shows how strict and unforgiving the new measures have become. Finally, there will be closer monitoring of pension credit and other benefits. Bank data will be cross-checked more regularly to ensure pensioners remain eligible. Even small, unexplained deposits or a slight increase in savings could trigger reviews, overpayment recoveries, or suspensions of benefits. Pensioners will now have to keep their financial records completely transparent and up to date, as even minor mistakes could have major consequences. When you look at the bigger picture, these rules have far-reaching consequences for pensioners' independence. Many older people value the ability to manage their own finances without interference. They want the freedom to use cash, the confidence to access their own accounts, and the dignity of not having to prove their identity again and again. These new rules risk creating a climate of fear where pensioners feel they cannot make normal financial decisions without worrying about being flagged or frozen. Independence may decline, and reliance on family members for digital support may increase, leading to feelings of helplessness and social isolation. However, there are steps pensioners can take to protect themselves. Keeping ID documents up to date is essential, whether that means renewing a passport or driving license before it expires. Checking your bank account regularly, either online or by requesting paper statements, can help spot problems early. Avoiding large cash withdrawals, unless absolutely necessary, may reduce the chance of being flagged. Nominating a trusted family member to help with online banking can also provide an extra layer of protection. And most importantly, any changes in savings, living arrangements, or family circumstances should be reported to the DWP as soon as possible to avoid accusations of overpayments or fraud. The DWP insists these changes are all about safety, but pensioners need to be prepared for the reality that accounts may be frozen, payments delayed, and independence restricted if the rules are not followed carefully. Staying informed and proactive is the best defense. Understanding the requirements, keeping documents updated, and regularly monitoring accounts can make the difference between smooth pension payments and unnecessary financial stress. The big question is whether these rules truly protect pensioners or simply make their lives harder. On one hand, they may reduce fraud. On the other, they risk punishing the very people they are meant to protect. Pensioners who have worked hard their whole lives now face stricter checks than ever before. The only way forward is to stay prepared, share knowledge with others, and ensure no one is caught off guard by these sweeping changes in 2025.